Hello viewers, welcome to Already Late. In this video, I will continue with educating you on debt mutual funds. In my last video on debt investing series, I had explained the reasons why you should know about the various debt funds. You can watch that by clicking on the link on your screen right now. Now, as you know, there are 16 categories of debt funds, and it is important to know what each one means. In this video, I will explain the first category of debt mutual fund, which is overnight funds. SEBI, the market regulator, defines overnight fund as a fund that invests in securities which have a maturity of 1 day. This means that the fund manager will purchase securities which are maturing a day later. Investments here predominantly is in CBLO, collateralized borrowing and lending obligation, and overnight reverse repos and other securities that mature in 1 day. Now first let's see what is CBLO. Collateralized borrowing and lending obligation is a market for short-term borrowing and lending. The borrower in this market can borrow money for a period of 1 day to 1 year against government securities. In case of overnight funds, money is lent for the period of 1 day only. The borrower will borrow money today by giving government securities as a collateral and pay the money back the next day and take back the government securities which were given as collateral. Now that is CBLO market for you. By the nature of investments made by the overnight fund, we can classify the entire portfolio as cash or cash equivalent. Also, it is important to know that the portfolio of an overnight fund would change completely every day, for a simple reason that all securities mature the next day and fresh investments have to be made. So the bigger question is, how does one earn returns on this kind of a portfolio? The returns are in the form of interest payments for that 1 day when the security was held in the portfolio. There is no source of any capital gains because of the securities maturing the very next day. The next aspect to look at is what are the returns that these funds would generate and what factors affect these returns. The returns on overnight funds are in sync with the rates for overnight borrowing and lending. If interest rates are falling, there is a lot of supply of money in the market which results in lower borrowing rates, which further results in lower returns in overnight funds. Let us look at some data from an overnight fund to understand the returns better. Now what you see on the screen now is a chart tracking the NAV, net asset value, of each unit of HDFC overnight fund. I have taken HDFC overnight fund just as an example for educating you, and please do not consider this as an investment recommendation. Now if you observe, what you see is an almost straight line steadily moving up as time progresses. There is no sharp dip or rise on any point on the chart, indicating extremely low volatility. This is exactly the job of an overnight fund: rise steadily without any major fluctuations. Now let us look at the daily return chart of the same HDFC overnight fund. This chart shows a slightly different picture than the previous chart. In this chart, you can see a lot of minor fluctuations and a steadily declining line. The minor fluctuations represent the change in daily return, and if you see the y-axis, the fluctuation is mostly in the range of 0.002%, pretty insignificant for most of us. There is, however, a major dip in late March 2020. What happened there? We will see it in a while. First, let us explore the gradually reducing returns a little further. To understand this, let us look at the annualized return chart and compare that with the reverse repo rate. Let me again remind you, all these charts are for educational purpose only, and please do not consider them as an investment advice. You can observe that for most period, the returns on the overnight fund is very close to the reverse repo rate. Overnight funds typically mirror the reverse repo rate on most occasions. So if you see a news flash that reverse repo rates have been increased, you can safely conclude that overnight fund returns would also increase to a similar extent. One question still remains unanswered. what happened towards the end of March 2020? In March 2020, as a response to COVID-19, there was a series of announcements made by RBI, including steep cuts in repo and reverse repo rates. Sensing economic turmoil, most institutional investors were withdrawing their money from all debt funds, and most debt funds were negative during this 1 week period. The impact on overnight funds was the lowest because of the shortest maturity among all debt funds. In fact, this was the only category of debt funds that did not give negative returns during the last week of March 2020. So yes, your returns from overnight funds could fluctuate, but very rarely on most occasions beyond a small range. So now we are left with understanding who should invest in these funds. Firstly, anyone with surplus money for a week or less should consider investing in this fund. You will mostly find corporates investing in this category because they have surplus money on a daily basis. The returns are definitely more than what they earn in their current accounts, which is zero. Hence, it makes sense for them to invest money even for a single day. Should individuals invest their surplus here? Individuals like you can consider investing in overnight funds if you want to invest surplus money in equity funds. You can first invest in an overnight fund and then do a systematic transfer into the equity fund. The objective in this case is to spread your investments into equity over a period of time and not to maximize the returns from the overnight fund. So if you're looking at returns from overnight fund, no. So viewers, I hope by now you have understood what overnight funds are, where they invest, what are the typical returns, and who should invest in these funds. In my next video on the debt investing series, I will explain about the next category, which is liquid funds. Do like this video, and needless to say, please share with anyone who wants to be a learned investor. Thank you. Happy learning.